what's it called? Robinhood. I think it's called webull is another one that has no commissions, etc. There's a lot of different, like for example, this one here. Excuse me. So what that allows you to do is that it allows you not to worry and allows you to sit back, especially when you're trading a smaller account, like I suggested in my previous video, where you can trade one or two, or like I say, I recommend trading at least 3 shares so that you learn to scale in and scale out. The other thing is that it's not a large sum of money that you're losing. It's also not a large sum of money that you're gaining. But what it does give you, which is what you need, which is the confidence in trading, knowing that you have the skill to trade and not getting in your own head and doubting yourself, doubting, oh, should I have gotten in? Especially when there's a lot of price action, when there's a lot of price movement, a lot of that movement can make you doubt what you are as a trader. Um, I see a lot of people talk about it's not so much pattern recognition. It's for me, it's always been about support and resistance and knowing when to get out and knowing when to get in, paying attention to support, paying attention to support and resistances, and following along with that mindset that I know that there is a lot, right? There's a lot. The longer a stock stays in a particular channel, the stronger the resistance and the stronger the support it is for future trades. And that's exactly what you saw here, right? Literally the moment it gapped up, it immediately sold off, and then it tried to re-rally to that point, and then it immediately sold off. You see the same thing here, right? For this was the support from here, right? Because it touched, what was this, almost 30, broke a little lower. You always have to allow a little bit of room, and then immediately it slingshot right back up. And that's exactly what you saw right here. You see the stock stall. Why? Because this was an area, and it did the exact same thing right here, right? It touched here for and it stayed within this channel for the better part of 4 days. It finally broke, and then the subsequent day tried to retest and then fell. So I know subsequently when I'm long that if I were in this stock and it gapped low, I know that this is an area of support because previously it was an area of support and it will become an area of resistance later on. It became an area of resistance here, which we blew through, came right down, bounced back up. Same thing, it meandered around that 30 mark and then it subsequently fell. Where could you have gotten short? Right here within this day. Or you could have taken a small position going short, like I said, not going all in. You could have gone in with your 1 share, gone in with your 2nd share, gone in with your 3rd share, and then look to scale out. Why? Because this is exactly the same place where it provided support previously. And so when you trade this way, this allows you to sit back and be a little bit more comfortable. It's not so much about recognizing patterns, it's just about something more like, not particularly like, oh, this doji is shaped this, this size and it's 3 dojis in a row, etc. Like a lot of that stuff I don't even pay attention to, because that's for intraday. It's for intraday scalping. If you're looking to intraday scalp, then you're going to be like chipping away, for example, looking at the 1-minute chart, and you're going to be looking for all those little signs there. But I trade the exact same way intraday as I would for the long haul, right? Same thing that you'd see here. This is from the 10th right here. You can see the support here, and what exactly happened right here. It came right back down to the support. Yeah, you always have to allow for a little bit of room, and then what happened? Bounce back up. Why did it sell off right here? Right there, right? Recognizing your simple support resistance levels and levels of support. And once those levels are broken, paying attention to them, it becomes really easy. You're not worrying about, these little price actions that are really, really small, right? These little price actions, I don't become worried. Oh, did I get 9s and I missed, and now it's 11s, and I'm like, oh, I'm not going to do the trade, and then miss, the little bit of a movement there. And I don't take these trades. I typically don't take these small little trades because they distract me, which is why I don't trade that way, because I have to watch it. I have to watch my position. So it typically becomes a distraction where I don't take these little bit of trades. Sure, you can make a little bit of money doing that, but typically the way I like to trade is on the macro, right? I typically like to trade on the macro. I want this move, right? This is the move I want, not this move, right? Not this move. I typically want this move. So you're not going to see those moves being a day trader. My advice is to swing trade first, and it makes day trading a lot easier than if you day trade and then try to swing trade, because you're so used to the little price actions and the clipping, the scalping, that you become nervous. I watch a lot of other people do trading videos, and that's typically how they trade. They trade very quickly, they look more nervous, and typically their win-loss ratio is terrible. Or I should say, like, they have like these huge days where, like, oh, I made 20 grand today. Shoot, I was down 15. And it's like, how the hell do you take losses like that? It's like, I don't think I've taken a loss like that since like my early trade days, when I first lost. And I think the most I was ever down in my whole career was 2 grand trading. I think it was like 2,000 or 2,200. And that was like over months. And that was when I first learned how to trade. That was like within that span of 6 months, and I was like, profit. I'd get to that point where I made money, I'd come right back down to that 2 grand loss. Come right to that point where I was about to make money, come right back down to that loss. And that's where I got scaled up. I was trading 100 shares for a long time. Excuse me, getting over a cold. And so, talking about how long should it take a person, it could be 6 months, it could be a year. I still work. Even though I trade, I still do work. I still have a regular job. I still have a small company that I run, because I do private home care in the city as well. So it allows me that multiple streams of income. Whereas someone who is, for example, new to trading, depending upon how old you are, if you're young, still living at home, then money may not be a big deal because your parents are still supporting you. But if you're a person who is living on their own, then I may not necessarily say that it would be a good idea for you to leave your job for X amount of time to pursue a career in trading, which is where swing trading allows you to keep your job, but then still keep your mind and your eye on what's going on within the financial market. Because during your downtime, you can go and you can see, oh, look, such and such stock is coming to a point, right? Because you're patiently waiting for your opportunities, right? You'll see your stock, and I was like, oh, look, so and so is coming back to that area, to that level where it had a resistance back in December. Maybe it's a good opportunity. Maybe I'm going to buy some puts and pay attention to see what happens, right? Maybe when this stock gapped up, you were like, there's my chance. There's my chance to grab some puts. And then you went short here with some put options at 38, and then you watched, oh, look, resistance, and then boom, it comes down. You're like, you know what? Maybe I'm going to grab some long-term put options at 36s, right? Maybe I'm going to grab some 34s as well. And then pay attention to what's going on within the market, and then be like, oh, look, we're coming right back to that support level from way back when, early in 2019. Maybe this is a good opportunity where I can, take $1,000 that I've earned in my job. Maybe I'll put that to buying some short-term calls and see how the market reacts when it comes to 30, right? So then you're clipping $4, the better part of $4, just sitting back, exercising patience, waiting for your opportunities, instead of the small churning that you'll end up doing. Especially when you're sitting in a monitor for long periods of time, it's hard to just sit on your hands. At the very least, if you're trading from home, you can, turn the TV on, which may not be a good habit to start when you're trading, or go to the gym during their downtime, typically between like 12 and 2:30. I typically take a break so I don't churn myself just doing bad trades, because sometimes you'll get stuck in these kind of little channels that stocks get in. And since I typically want the bigger movements, these don't do anything for me. Like these little channels, they don't do anything for me, and I end up having to watch it. So I would recommend, if you're looking to do day trading, or swing trading, I should say, to learn how to day trade, my recommendation is swing trade to learn will help you with your day trading. day trading will not help you with your swing trading, just because the mentality is different and it's much faster than swing trading. And swing trading is just like, long-term investment is slower than swing trading, right? If you're going to hold something for the better part of a year, you're like, shoot, I buy it and I'll come back at the end of the year and see if I made any money. I mean, obviously that's not the way it works, but you kind of get the point that I'm talking about.